I want to talk a little bit about interest.
Interest rates, yeah.
Yeah, interest rate, yeah. How people get the best rate? How can they make sure they get the best rate for their mortgage?
For a mortgage. And we touched on this briefly before. Keeping up your credit. You got that credit score of 740 plus, you're going to get the best. You're going to get the cream of the crop when it comes to interest rates. With two programs, underwriting is going to be a lot less stringent. Just all the way around, it's just going to be an easier process. Not only that, I get interest rate is extremely important, but you got to keep in mind, you also got homeowners insurance. Homeowners insurance looks at credit scores. If you don't have that credit score, they're going to jack up your homeowner's insurance too. And at the end, that's all going to impact your payment. So keeping your debts low and, that FICO score high, over 740. I mean, ideally over 740. Between 680 or anything over 680, especially for VA, is okay. But being over 740, you're in that sweet spot.
So basically for people to get the best mortgage rate, they have to talk to you, get ready for it. If it takes time, take the time, get ready for it, and save.
And of course, we're also going to say, look, I mean, if they're just like determined to get to 740, I'm not trying to say get to 740 because, it might not be worth waiting to get to 740 if the prices are continuing to rise. So
and the rates.
And the rates. So it's kind of like it's going to be a catch-22, and we'll show you that too. Like as in, no, we need to do something now, even though you're at a 700 and you can only, I don't know, interest rate's going to be 1/8%, so it's 0.125 higher. That's only going to be an average payment difference of like $15-$20. And that's not worth waiting for 6 months to recover your, or to get to that perfect score. I'm not trying to say get that perfect score, but to get the best rate is 740. That'll be the quick answer for that.
Awesome. How often the interest rate change?
Yeah, so that's like hourly. And when someone asks us, hey, can you give us an estimate? I can absolutely give you an estimate, but I'm going to give you a long disclosure with it because it's just not fair. Let's say, for example, you shop my rate in the morning, and let's say you're shopping many lenders. I would recommend more than 2 others. And you shop them in the afternoon, and let's say the rates possibly could have improved, meaning lowered just a little bit. I'm at a disadvantage. Even though I've sent you that day's pricing, or pricing meaning rates, I have to resend you my estimate at that particular time. So when you shop for interest rates, if that's what you want to do, you have to shop within 1 hour. But then you also know who are the lenders who are actually going to respond to you. Because if you're calling all these people and they're not calling you back, guess what? That's going to be your service throughout the transaction. So you got to remember that too. It's not just, I always preach this, it's not always about the interest rate. There's so much more that goes into the loan process, cost-wise, mortgage insurance-wise. I mean, I can go on for days about this stuff. But talking to somebody who's knowledgeable and who will answer your phone call is also quite important.
I heard about rate locks. Can you tell me, is it always worth it, or how long it stays? A little bit about rate locks, how people can get their rate locks or shouldn't.
Yeah, so if you don't lock your rate right now, you like to gamble, and you are not a good gambler. I'm just kidding. But no, seriously though, if you are thinking about floating your interest rate, floating meaning not locking, in this market, it's an advice that a lender, that's just incorrect advice that a lender gave you. I do not let, frankly, anybody float in this market because unfair. Your interest rate's only going to go up every day. It's been going up. This is a proven fact at this point. They're not going down. They're only going up. And once you are under contract, when can you lock? Because I think it's an important thing to discuss too. Okay. You can't just lock an interest rate the day you talk to me. I wish. I can't do it. When can you lock on the interest rate? When you have a contract, a fully ratified, we'll call them fully ratified contract, meaning you and the seller have agreed and signed on the bottom line. So you've agreed on the price, you have a closing date, and we have a address of a house that you're buying. Once that contract hits my desk, that's when we can discuss rate lock-ins.
Oh.
Until then, you cannot lock in on an interest rate. because interest rate is not only loan number specific, it is also address specific. So I think that's a very important factor to discuss because I get that question asked now more than ever for obvious reasons.
Yeah. Is there any way to buy a rate lock before they have a contract?
No, there's no way. I'm sorry, I thought you were talking about buying down. There's no buying of an interest rate lock. You can only do that once you're under contract.
Okay. I hear a lot about rate points, about the interest points that people can buy, or is it worth it? Is it how does it think when people hear, hey, you can buy rate points? Tell me about it.
Does it make sense?
Does it make sense? Yeah.
Sure, absolutely. And again, this is where when you talk to not just a loan officer, but you want to talk to an advisor who is going to be able to basically not only document, but really break all of that down for you. What do I mean by that? Not only will we say, well, here's your rate with no points, and here's your rate with 1 point. The 1 point is usually 1% of your loan amount. What is that 1 point? It buys down your rate, but not by 1%. It buys down your rate by typically around 0.25%. So make it easy math. You go from 5%, and that's the cheapest interest rate, and you can buy down your rate to 4.75% with 1 point, which is equal to 1% of the loan amount, right? But is it worth it? This is when somebody like myself comes in and says, all right, let's do the math. If the difference in payment is only $25, for example, but you're spending $2,500 to buy down the interest rate, is it worth it? So then we'll break it down into years. How many years will it take you to recover from spending that extra money?
To break it even.
Exactly, to break even. Would you rather have this money in the bank, or does it make sense for you to only save $20, $23, $25? And then we go even deeper, and I know you can't see it, but it's another visual I want to show you. We do a visual for you on top of everything else specific to your situation. I put in the loan amounts, I put in the points, I put in here's a rate with points, here's none, and it literally breaks it down. Like it says in this case, it was a $250,000 loan amount. It was a 5% interest rate with 1 point, for example, just as an example. And it says, yes, that's conventional thinking, but it's incorrect thinking. And it says you would rather pay an extra amount of money towards your principal and pay less in payment versus buying down your rate. Or if you do that, you're going to break even 186 months. It's going to take you to break even to save $25. That's 15 years. Who's going to stay in their house for 15 years? Not a typical consumer today. So, but we go into this detail for you. I'm not just going to be like, sure, here's your rate with 1 point, here's your rate with no points. It doesn't work like that. We want to make sure that we cater this product to you, or to loan program to you and your specific needs, not just because the system tells me so.
Now, let me ask you a little bit kind of intimate question. Mm-hmm. Do lenders get any bonuses for selling extra points?
It's all gone away. So now we're all in the same boat. Everybody, there's zero. Like it literally, I have no motivation to give you an interest rate with 0 points versus 3 points. I get paid the same. So I don't care what you do. That's why I would rather advise you, so you'll bring me all of your friends and family and we can help them all buy homes, because there's no extra incentive to me whatsoever as to if I sell you a rate with 0 points, 1 point, 2 point, or 3 points. Doesn't matter.
Awesome.
Yep.
Thank you. What is the difference between APR and the mortgage rate? Because I've seen it a lot. I know for me, but I'm pretty sure, and I heard this question a lot, but I'm a real estate agent.
Always, yeah.
You are mortgage professional, trusted professional. Can you shortly explain what's the difference between mortgage rate and APR?
And, I love it when people ask me, well, what's your APR today? And really what they mean is what your rate is today. But there's a lot of confusion. There's always going to be confusion. There always has been confusion. So the interest rate is how your payment is calculated. That is your principal and interest payment. That is based on whatever the rate I'm offering that day. Every lender has to give you the APR as well as the interest rate when we do our official disclosure. Meaning when I send you an estimate, I have to send you both. So what is the APR? APR is not whatever the rate is, plus there are certain costs that are involved in the mortgage. They get all wrapped in together into this amazing formula that I don't care to know, nor do I need to know. And that formula pops us out that percentage that's called APR. So APR is the cost, is not how you make your monthly payment, but the rate is your monthly payment. Now, red flag is when a lender says, oh, well, today's interest rate's 3%. But then they give you over the phone, if they're smart enough to disclose APR, which they have to, but the APR is 5.3, you should be like, wait a minute, that's a big difference. So why is my APR so much higher? Why? Because the lender's charging you many, many, many points to buy down that interest rate to 3%. I'm just giving you an example. But people don't think to ask that question. So the only thing they hear is the lender online said my interest rate is 3%. But what you don't know, and the lender does not have to tell you that, oh yeah, it's costing you $15,000 to buy down your interest rate to 3%. They just give that to you in the form of an APR. And you don't know, a typical consumer does not know to look at the difference. They don't know that. That's why I say when people shop for rates, the rate honestly is a tip of an iceberg. Think of it as a tip of an iceberg. You've got the rest of the iceberg of what? Costs, points, all this other stuff that lender will, underwriting fees, all this stuff that underwriter can tack on for that interest rate. So yeah, I can tell you today's rate's 2%, but it's going to cost you $25,000 to get it, but I don't have to tell you that over the phone. And we get that so much. And that's where, again, an advisor comes in and says, okay, let's take a look at these numbers. Have they sent you something in writing? Never accept anything over the phone. Never accept anything that just somebody on the internet said my interest rate is 3.25%. My husband actually pointed it out while we were sitting there looking at back to DMV. I was at the DMV today, and I was studying for the test, for the driving test. I guess I had to take one. But there was an ad on the bottom, and he was literally making fun. He's like, oh, the interest rate's 3.25%. I'm like, yes, let's read the small print. That's a 10-year loan, and it says on the very bottom, super small, you can barely see it, but it's there. It costs like 2.5 percentage points origination and 1 percentage points discount. That's 3%. If you buy in a $300,000 house, let's do the math on that. That's over $10,000, okay? Whatever, plus whatever other costs. But you're not reading that. You're just saying, oh my gosh, the interest rate's 3.something%. You know, but my husband loves to point that kind of stuff out because he knows it gets to me because that's what typical consumer will see. So
when people hear or see advertisement that the mortgage rate is low, don't just pay attention to the mortgage rate. Ask them what's the APR, because that's what you're gonna pay. And basically, from your words, the APR is basically mortgage rate plus all the expenses.
Not all the expenses, but some of the expenses that are important. And the main important expense is the discount points. So if you've got an interest rate of 5%, just because I want to do simple math here, 5% interest rate, but 6.9 APR, something's off. That's a really large spread between a rate and an APR. So we've got to figure out what's going on.
What's normal?
And, under 1%. Sometimes it's even 0.5%. Sometimes it's very close to the interest rate, which is the best because that means the client is getting charged the least amount of fees under most in normal circumstances.
Awesome. So you guys figured out, we are trying to educate you. We are trying to make sure you guys know what to expect whenever you are talking to a lender. Either it's ERA or it's not, but make sure you know your stuff when you talk to one of them. Mm-hmm. Now, when people are talking to another lender or say talking to you, should they focus only or more on the APR, or they should also look at the closing cost as well?
Yes.
What's the more important, or are they equally important?
All of it's equally important. You got to look at the full picture, okay? If somebody tells you over the phone that the interest rate's 3%, you know what? That's a pretty big red flag, okay? Number one, that doesn't exist. If they didn't tell you anything else,
at this point,
at this point, right? If they don't say anything else, like as in, that's for a 10-year loan with an adjustable rate mortgage that's going to cost you this, they're not going to get into that much detail. So I would not talk to that lender because that's not a trusted source. So you got to look at the full picture. You got to get an estimate of costs. You got to make sure it's something that is an actual legit loan and not just something that somebody says on the internet, because many banks or many online companies get paid, their loan officers are paid by just pulling credit. So guess what? Why do you think another lender, which I'm not naming their name, but they have Rockets, so the Rockets, okay, in their title, okay, but anyway, they are paid by pulling credit. So they're going to hound you until they literally pull your credit, because that's how they get paid, or that's how, they try to get you into their pipeline. But they don't disclose all that stuff up front. And I can tell you they don't, because I have an example that I actually have on my Facebook. If you're curious, it's a public post. All you gotta do is hashtag Quicken Loans. I did say their name. But it's a public post because it's online, and please look at it. I had a consumer who was charged $17,000 in discount points. Not only was he a doctor, he was a veteran, okay? I charged my veteran $17,000. He had no clue. And yeah, I've exposed them and I've put that right on Facebook. So it's terrible. And if you're just about the rate, yeah, he thought the rate was great because it was a lot lower interest rate. He's like,
No
well,
wonder.
yeah. I'm like, well, no wonder. You got $17,000 in origination charges. That's why. So, and until I pointed that out to him, that was going to be $17,000 out of their pocket because the seller wasn't paying that. They were like, forget it. That's when you go, okay, what's wrong here? What's off? And but that's an online lender for you.
Now, so the best way to focus, not just the closing cost, not just APR, but to compare both of them, to consider both of them.
And to compare the full picture.
The full picture, yes.
Not only is it really, if you're calling the 1-800 number, do you really, you should care who you work with, right? You should Google us. Google me. So I'm a trusted professional because why? Because I've worked with almost 2,000 applicants. Gosh, that's crazy to say. But we've done over 2,000 closings at this point in my career. So I'm online. Google me. So when you're calling the 1-800 number and you're talking to somebody only via phone or via email, and you can't even find them online, that's kind of a red flag. So do your research. Make sure you get the full picture when it comes to your loan, when it comes to your estimate, when it comes to rates, and when it comes to your lender.
Now, let me ask you this question. It's not on our list, but I'm thinking if a person thinks they got the best deal, and they got the paperwork, but honestly, they're not sure what they are looking at. Is there any way that you maybe take a few minutes out of your time and they can call you and they can send you the paperwork and you can take a look and tell them, hey, is this the best thing? Is this the best deal you can, or maybe you can show them that, hey, that's the problem.
Sure.
And here's the way to get the best deal and better deal.
Of
show
course.
them. Would you do that?
Absolutely. This is back to advising, and I want to be that trusted professional. I want to make sure that and you feel comfortable reaching out to me because, of course, we'll try to get that deal in the end for you done locally, so you're not out there, on the internet thinking you got the best deal. I'm going to make sure that, number one, we review everything, make sure the deal makes sense. All the numbers make sense. All the closing costs are disclosed correctly. Because how many times are lenders not preparing you for those upfront charges we just talked about? All the time. People don't have any clue that they have to have money in the bank to buy a house. A little bit of money, not a lot, but just enough to, So I will be more than happy to do that.
Awesome. Sure. So you guys got a friend now in the mortgage
Always
business.
have a friend in the mortgage business. Come, anytime.
Any questions? If you think you got a best deal,
still
good.
Call me. Yeah, absolutely.
Call her.
Yeah.
She's going to tell you, is it true or not? Because look, if you think you got a best deal and then you find out something before closing, do you have to bring $15,000-$17,000? You're going to be happy. You're going to be ready to move in. And if you have that money.
That's not a shock you want.
Yeah, and that's not a surprise or a closing gift you want to pay for.
No.
So yeah, get with Ira and make sure you get the best deal.